Hey everybody, quarter for 250,000 with 3 A's. Take them. We're out here at the New York Stock Exchange with my man, Dan Ives. July is history. Oh, August is a mystery. Let's talk. We finished it out. We had earnings, wild earnings, right? Microsoft, Meta, blowout earnings, right? You've had Amazon, good earnings, but disappointed, right? We've got the Fed meeting yesterday. We talked about it. I kind of thought we should have pivoted. I just had a nice chat with Steve Leisman, who said, why would you overrun an engine when you don't need to do that, when you should back off? I kind of think he's in the same school as you.
But the data, if you look at the data that just came in, it supports now those two dissenters that they should cut.
Really? So you're saying that because what? Because unemployment went to 4.2 from 4.1 and they revised the employment numbers? So you're saying we should have cut?
I'm saying it now gives a path to cut in September.
Okay, fine.
But look, if you look at big tech...
But we didn't know that yesterday.
You didn't know it yesterday.
Right.
But so now think about the market setup. Market's pricing in 2 cuts rest of the year.
Really?
So now market's pricing in 2 cuts rest of the year. You combine that with strong earnings from Microsoft,
right?
Amazon,
Meta, right?
Overall big tech, it shows the AI revolution is going into its next stage of growth.
Okay.
So that is a great combination once the Fed starts to cut into a market that goes up significantly.
Right, but today we're under major pressure here. We're down 100 plus points on the S&P. What is that a function of, in your opinion?
Because market's basically saying Fed was late to the game.
The
unemployment numbers are really disappointing, and they're basically saying you got to start cutting now. The dissenters are right. So the market, if you saw, trade off big and now coming back because now market's basically saying, guess what? Cuts are happening sooner.
Okay, so that's good. So look, when we see markets overreact on a morning after the Fed follow through, right? You're seeing, it's emotional. Right, it's not reality. And so what you're going to end up happening was, I even said it this morning on FinTech where I said, you know what, my gut is, we're seeing a lot of these intraday reversals where the trend is up. Fresh money is going to come in today, right? There are people who are going to be playing catch up, right? And the market's overreaction emotionally to really, look, the unemployment numbers were not good. Revised 3 revisions that were really disappointing. We were looking for 147,000 jobs. We came in at 73. That's not. So all the economic data that came in, consumer sentiment, also worse than expected. So a lot of economic data that was disappointing, which will set the stage for the cut. But think about it. There's no way that the Fed could have known this yesterday, right? And so, or on Wednesday, right? And so that's why we didn't have the reaction we wanted.
No, but I think now, this sell-off that we're seeing, it's healthy. Because my view is like, for the market to go much higher, you have to have these sell-offs, you have to have the Fed to sort of recalibrate. But look at overall numbers.
Right.
Like, you go across the board from tech to some of the consumer names.
Right.
I mean, you're seeing consumer holding very strong.
Right.
And I think, especially when it comes to tech and AI revolution, I mean, you feel more emboldened in the bullish thesis today than you did a week ago.
So how exciting is this when you hear the guidance come out with the reports, and everybody who's talked about it, they talk about CapEx AI spending, right? All the Mag 7, everybody's talking about that in their conference call. And that's not usual.
But that shows you had $325 billion that was just big tech.
Right.
Now the rest of the enterprises, the sovereigns.
Secondary, tertiary, derivative. That's a derivative trade. Holy cow. I mean, forget about it. I don't even know what to say about this. He is hitting on every piston. People have to wear sunglasses on the floor to be able to even handle. CNBC had like everybody wearing dark sunglasses to be able to handle this outfit. Okay, so we're in the beginning of August, right? And August is going to be a mystery because we are going to. You may have the Fed come out a little early and find out what, sort of talk about that. They're not going to say that they missed the boat, right? But they are going to position and posture themselves for September's meeting.
I think you're either going to get a cut in September or a clear signal of a cut, and then you have October, November, then you have 2 cuts.
So you're pricing in 2, that's huge.
But you were only pricing in really 1.5 this morning, now 2 because of those numbers.
Because of the economic data. Now, question. The economic data that came in this morning, is that a function of the tariff thing? We also know that Mr. Trump came out of the gate this morning, once again, laminating this self-imposed madness on tariffs again. We thought that was a little bit of a history, but it's not.
But we said the August 1st was the deadline.
Right.
You also need to make some examples out of countries,
Right.
India and Brazil.
Right.
Because guess what? China, when that negotiation happens,
Right.
you need to basically have the examples that you've set being like, look, negotiate with us.
Right.
So Brazil and India are kind of almost, they're the ones.
They're like Lehman Brothers during the crash. They're the ones that are getting.
Especially Brazil and India are the ones being like, hey, China, negotiate with us. It could go like the EU.
Right.
It could go like
Yes,
Japan.
yes, yes.
Don't look what happens. But also, we will also
I
say,
like the way you think.
if you think about tariffs now, let's call it 18% is
Right.
kind of the blended
Okay,
rate.
you went from 10 to 15 up to 8, so you're ratcheting
but
up
the
a little.
street needs to see probably 15%.
Right.
But again, as me and you've talked about for months, it's in chalk or pencil.
Right.
These are
Right.
not.
These are not etched in stone yet. We're not like talking the Flintstones.
They're gonna-
right? They're not tapping it
No,
into
I
the
mean,
rock.
it's all part of the
So are you digging what we just said here? So think about it, right? China is the ultimate negotiating venue that we're looking at. We need to deal with China. But on the way there, what Mr. Trump is basically doing by setting the stage with India and with Brazil is by showing that, you know what, guys, I'm back to playing hardball a little bit, and I'm setting the stage for China to understand that I want to make a deal, but would you rather go the way of Brazil or would you rather go the way of the EU? That's huge for what you just said.
And I think that's really the dynamic that's playing out.
So you know what? It's fascinating. I kind of thought, I didn't think it was over, but what you're doing is, so we're in the middle of the summer. This is important stuff, right? So you always said that the path to us making deals across the globe is not going to be an easy one. There are going to be bumps in the road, pebbles in our shoe. We are going to run into some obstacles, but that does not mean that this is a bubble. That doesn't mean that this is the end of the rally, right? Where are the Bears? The Bears are very short term.
But also the rally, but think about big tech earnings, what you heard.
Blowout.
But it's not, those are massive blowouts that now shows the second, third, fourth derivative playing out.
That's important. So just so you understand what we're saying, you've got the Mag 7, you've got NVIDIA, right? But there are secondary and tertiary derivative plays in the AI space that are announcing in their earnings call this quarter about CapEx spending in AI. That's never been done before. That was not part of their wheelhouse. So that's huge. So this, you know what, it completely endorses your story that we are in the middle of an AI revolution. We're in inning number 2. It's 8 o'clock in a party that's going till 4 a.m.
It's 10 p.m., 10:15.
Right.
It was 9 p.m.
Right.
Party goes to 4 a.m.
Party goes to 4 a.m. Studio 54. We're back in the
1980.
game. There you go. I love you. Have a great night. Trade like Einstein. Einstein and Ives blowing it out of the water. Stick with us. And that's all I got to say about that. Boom.